welcome to the Monday edition of the Dividend Cafe, where there is a lot going on. For one thing, I'm actually recording before the market has closed today, which I never like doing. But because of the schedule of things after the market closes, the written Dividend Cafe and our numbers and everything at the daily recap in your inbox will be the final closing numbers. But it's just on the podcast and video here right now. I'm recording with a couple hours to go in the trading day. And that's a good thing because there has already been quite a bit of movement within the day. And I want to be able to address market relevance, market sensitivity around the Iran military efforts and endeavors over the weekend. Obviously, that being the biggest story in the world right now. I want to first just make abundantly clear that I have some things to say about the relevance of the weekend's events to the energy sector, to markets, to the economy. I'm going to address these things quickly and particularly talk about what we're seeing already here today. But if one is looking for more strategic or military analysis, then Dividend Cafe is clearly not the best place for that. And hopefully you have various sources for you think you can get good coverage on that subject. And I would add too that if you're looking for editorial coverage, the do's and don'ts, and they shouldn't have, or they shouldn't have done something, or they should have done something. Most of us probably have opinions on all the propriety of a lot of these things. But again, I talk all the time about what I believe is right or not right in the economic sphere in Dividend Cafe because it's directly relevant to, I don't know how to talk about economics without sharing my opinion on matters of economic policy. On something like this, I'm just not going to do it here at the Dividend Cafe. It's not to avoid giving offense. I don't really ever think about that. I'm not much in the business of sanitizing the things I say. It's that I don't believe Dividend Cafe is the venue for those things. And so if you are looking for a lot of opinion as to what we should have or shouldn't have done, again, I think you probably have better resources for that. But where I do think Dividend Cafe is a good resource is to talk about the market reality of what's taking place. So you may know that the futures Sunday night opened down 500 points. Now, let's just say that the market was not even or slightly up as I'm sitting here talking right now, which it is, that the market had not recovered 500 points of being down on the day, which it thus far has. Let's say we were down 500 points. You would say, okay, well, that looks like the markets are really kind of responding to this Iran war effort. What has happened? There's fear. 500 points is nothing. It's not even 1%, essentially. And you're talking about there being a ton of days that have seen far more than 1% up and downside already this year. And it's the beginning of March. So the denominator is so high now that when the numerator is 500, it really isn't a very big deal. 1% does not suggest some sort of major event, let alone 0%, which is where we are now. Now you can say, well, oil prices moved last night 8 or 9%. As I'm sitting here talking, they're up 6 or 7. Again, 6 or 7 isn't that much. And by the way, it's also leading to, like getting up to, not starting from, but moving to an oil price of about $70. So, when Russia had invaded Ukraine and we were already in the 80s and then it went up above 100, those are big numbers that have a big input cost to producers and obviously a big consumption tax for US consumers. At $70, we're kind of below a median range of where the oil and gas sector wants to be anyways. That's not to say there's no relevance in this with oil and gas. I think the bigger element you're seeing is if some of these other Middle Eastern countries that have cut off their LNG production, liquefied natural gas, then more and more buyers need to end up getting imports from the US, meaning the US exporting more LNG. That becomes an interesting investment story. And you've seen a lot of the LNG, the liquefied natural gas players in the US, whether it be the pipelines, producers, terminals, all seeing some price action around that here today. So to get to the underlying point, um, there is no one today that includes David Bahnsen in the Dividend Cafe that can give you analysis of where this military endeavor is going. I can tell you that if it ends up being 3 days, even 3 weeks, and pretty minimal, Lord willing, loss of US life, that it will likely end up being no kind of market story at all. And that if it were to become a 3 month, and it's not going to become a 3 year thing, so people are starting to make comparisons to like the Iraq war in 2003. This is not going there for a whole lot of reasons I won't get into now. But my point being, even 3 months, 6 months, I am very skeptical that I would consider that above 0% probability, but a very low percentage probability. And I think the idea that like all the bombing from the US and Israeli forces is going to be done in the next day or two is pretty low probability too. But the base case, the highest probability, is a shorter term conflict. And what exactly the end run ends up being, I do not know. But the reason I bring this up is that I think our market expectation has to be tempered by the uncertainty of how long this ends up going. Bottom line, the longer term geopolitical instability leads to greater volatility in risk assets, and the shorter term leads to a flatter volatility and a more benign outcome in risk assets. So, what have we seen today besides stock market drop and then almost immediately begin recovering? Just sort of kind of punishing the overnight speculators is really what that was. And the fact oil prices are up, but not a lot. I can also look to the recent effort when we took out the nuclear facilities a few months back. When you look at the market response after the horrific October 7th attack of Hamas on Israel 2.5 years ago, when you look at the Iranian attack on Saudi, the drone attack on Saudi oil fields, I believe that was in the end of the first Trump or the third year of the first Trump term. But regardless of the exact timing, there's been a handful, and I wrote a Dividend Cafe about it then, a handful of geopolitical events in the Middle East that in times past we would have thought would see oil up a lot, equities down a lot, and there wasn't much response. You're seeing that again here. And I think that a lot of that has to do with a repricing in market functions that the Middle Eastern efforts are expected to be shorter, not longer, and more airbound than ground bound than they used to be, with less capacity for retaliation and for domestic terrorist cell involvement and other things of that nature. Look, that's not to say this thing can't get worse on that front. But if I had just said, for anyone who's been in markets for decades or studied history for decades, we had this major historical US military strike on Iran. What do you think's happening with stocks? I don't think many people would have said by 1:30 Eastern time the market would be up on the day. And I don't think, and this is the more significant factor we talked about with our investment committee this morning, that the bond market would be down. The so-called flight to safety that usually sees treasury yields go down and treasury bonds jump up. And today you actually see the bond market. I'm going to give you the exact numbers as we're talking, but up and down the yield curve. Right now, the 10-year is up 9 basis points, the yield. So you've seen bonds all sell off today. The 2-year is up 11 basis points. So the entire term structure of U.S. Treasury bonds is down as yields have come up. Okay, that to me is obviously the opposite of flight to safety, in tandem with oil prices being up but not that much, in tandem with equity markets all having a reasonably benign response. As I'm sitting here talking, the S&P 500 is dead flat. The Dow is basically dead flat. The Nasdaq's up a little bit. Okay. Now, energy is the top performing sector here on the day, and that's not a big surprise when you look at oil prices. they're off of their highs, but there's the WTI is up about 5.5%. That's not the type of stuff you expect to see if you think the Strait of Hormuz is going to be shut down and we're going into a World War III scenario in the Middle East. But it is partially a byproduct of what happens when the US has significant energy independence. So as I'm talking, top performing sectors on the day are energy, and then behind it, technology. And then the worst performing sectors are some of the defensives. So again, you would think your consumer staples and healthcare would be the big rally points in a flight to safety day. We're just not seeing any of that. So that is the basic encapsulation of where things stand. I think that we still want to get more information as to where a lot of these things are going. But I think that my big takeaway for market watchers is that this is not fundamentally about the Iran efforts. It is how that plays into an additional factor with the questions about AI, the questions about market valuations, all these concerns about private credit. I wrote an entire Dividend Cafe Friday addressing that. My point is, you have a kind of ecosystem of uncertainty, some of which I think are nonsense, some of which I think are more valid, but then you stir it together and add in a very significant geopolitical story. On the margin, it leads to higher uncertainty. But the uncertainties that exist with these various headline events have to be understood in the context of, when President Bush invaded Iraq in 2003, we were off of a almost 3-year savaging bear market. Valuations were very low. Markets had been pummeled. Right now, it's the polar opposite. We're near the highest valuations we've ever seen. So you're basically dealing with a very different starting point. Now, we're not going into a 4-year war the way that we did with Iraq, but whatever we're going into and whatever we're dealing with private credit and AI and tariff impact and Supreme Court uncertainty and all these things, the point is it's uncertainty events, some more valid than others, combined with elevated valuations. And elevated valuations, if nothing else, change the risk profile. That's what I would suggest is the big takeaway. Read dividendcafe.com for more update, and I hope that this has been somewhat worthwhile. We're going to continue watching it each day. You'll hear from me again tomorrow in the daily recap. And in the meantime, thank you for listening. Thank you for watching. Thank you for reading the Dividend Cafe. And I will say from the bottom of my heart, I earnestly hope and pray for the safety of all U.S. troops. God bless America.